Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining us for this segment, we have Jay Khatari, Lead Investment Strategist and Global Head of International Business at DSP, as well as Souvik Saha, Investment Strategist of Equity Investments and International Business at DSP, to discuss investment management in the Indian market. It's great to have you with us, gentlemen. Thanks for joining us on Trade Talks, and tell the audience more about DSP.
Likewise, thanks, Jill, for the opportunity. So DSP Asset Managers is a part of DSP Group, which goes back almost 160 years. So we started operations in 1880s. We went on to do investment banking, broking, asset management. Along the way, we've sold all the other businesses, and asset management remains the only business. Two large associations over the past 2 decades. The first one was with Merrill. It was a DSP and Merrill joint venture from 1996 to 2006. Fast forwarding into 2006, you may recall BlackRock bought over the Milam business, or the Merrill Lynch Investment Managers business. At that point in time, the DSP Merrill Lynch business went on to become DSP and BlackRock, again a 60-40 joint venture. That went on for almost a decade again, until 2018, when DSP bought back the BlackRock stake to become 100% DSP Investment Managers. And currently, we own, manage around $17 billion in assets across equities, fixed income, and alternates, and of which around $12 billion is equities. Rest is in fixed income, and of the $12 billion, we manage around $2.3 billion for global pension funds, sovereign wealth funds, family offices, endowments, etc., which is the global capital.
What is your firm's investment philosophy and methodology?
It's absolutely bottom-up investment. We are benchmark aware, but not benchmark driven. Focus is entirely on return on equities and earnings growth, because these are the two variables which have consistently generated alpha in the Indian equities over the last 2 decades. And the focus is on 3 pillars of stock selection, as we call it: business, management, valuations. What we mean by business is it should be simple, predictable. It should either be high growth in a total addressable market, which is able to grow its business, or it should be a cost leader, or it should have competitive advantage. And of course, free cash flows is something which we keep an eye on. Management, as another pillar, is focused on credibility in terms of managements, what they say, what they do. No dilution of capital, or limited dilution, because that shows skin in the game from a management standpoint. And capital allocation, which is extremely important, because that kind of really impacts the return on equities and the overall health of the business. And ownership and passion of the promoters is something which has to be certainly there. And lastly, valuations, it has to be viewed alongside management and quality. But we do take valuation seriously in terms of there has to be a margin of safety for us to make returns. But net, if you take care of your losers, the winners are going to take care of themselves. So that's our broad philosophy.
Does DSP have any ESG investments or ESG philosophy on the investing?
Absolutely. So in terms of, we don't have an ESG specific fund, because we feel that only one fund shouldn't be ESG specific. So we are doing an integration within the ESG space, where we are kind of integrating our investment philosophy and process to kind of align ourselves in terms of environment, social, corporate governance. And we are signatories to the UNPRI, and we are also now signatories to the Climate Action 100, and being the lead kind of analyst on a couple of Climate Action 100 companies. So that's our general philosophy. We are not entirely exclusion driven in terms of completely excluding a couple of sectors, but rather hard to abate sectors. We look at it more from active engagement, and then kind of working alongside companies, and then trying to reach the goals which we have set out for ourselves. But we do entirely our own analysis. We don't use any third-party research providers, whether it's MSCI or Sustainalytics and many others in the market. But we do our own internal research and categorization.
What's DSP's market outlook for the rest of the year?
Hi, Jill. Thanks for the opportunity. Indian markets have been in news for making its all-time high. In fact, even today, markets are up around another 70 basis points. I would say, there's been a great comeback for the FIIs into the Indian markets, making the total YTD count around $8 billion. And on the other hand, the domestic flows has remained extremely robust, and supporting the markets to a greater extent. If you see the index today, Frontline, MSCI India would look expensive in compared to the EM and the DM. But if you dig down, you will find that the index has been largely polarized, but it remains in average with its long-term valuation. That offers, though the index remains to be expensive, slightly expensive in compared to EM and TN, but there are great opportunities from a stock-specific point of view within the index, and we believe that stock selection is going to remain the key from here on. The inward-looking sectors has done exceptionally well because of the strong domestic demand there in the economy, in compared to the export-oriented sectors, where there was some pushback on the global demand and the sluggish global demand outlook in that way. To be honest, the Indian market still remains to be extremely robust, and the market has remained resilient. And we expect MSCI India to grow around 15 to 16% for the next year as well. From a risk-reward point of view, banking, auto, and pharma are the three sectors which offer the highest risk-reward at this point of time.
And finally, what's DSP's plans for the next 12 months?
Sure, Jill. I think the paramount focus is on alpha generation and continues not just for 12 months but even beyond. But generally, in terms of the next few quarters or the year to come by, we already now have an office in the UK. The idea is to be closer to our investors in the US, Middle East, and Asia over time. We are also kind of planning to launch a couple of interesting strategies within our GIFT operations, GIFT IFSC International Financial Tech City, which is in Gujarat, India, which is India's so-called International Financial Tech City for launching these strategies, and further kind of strengthening our understanding on the ESG, sustainable investments, integration and active engagement. So this is our general thought process for the next 12 months.
Okay, Jay, Souvik, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.